Happy Friday, guys. Welcome. All right, chat. Good to see you. Good to see all the familiar faces. All right, did we survive? We hanging in there? We doing okay? I know it's been a test of faith the past 2 weeks. We'll call it that. But I think we're gonna be okay here. We got a lot of good stuff to talk about here. This is a fun one because it is not focusing on one specific indicator or even strategy. We're going to talk a little bit broader here and about how we can play the AI theme in an intelligent way at this point and in its kind of development here. So we have a lot to talk about, a lot of different kind of subsectors that I think are worth noting. And yeah, I think it'll kind of loop back into a broader market perspective because, as we all know, AI has been the driving narrative of this major market rally, that we've seen in the past couple of years. So we are going to jump right into that here. Hey, Visridge. Hey, Talk. Hey, Nick. Bad Company. Leo. Good to see all you guys in here. Awesome. This was a faith-based rally. Yeah, and this is kind of what I've been saying kind of since the initial tariff shock, where, I mean, say what you will about Trump, but it's kind of genius. I mean, he's saying, hey, I'm going to do some wild stuff and then I'm going to tell you to buy. And if you listen, I'm going to, market is going to go up. If you do not believe, then you did not trust that and you missed out on some gains. And this continues to be the theme. So I am I am I'm a believer. I'm a believer in buy the dip until the dip stops being bought. And what we saw today was clearly the dip being bought. And yeah, we're going to talk about the other faith-based investing, which is the AI narrative. What we saw initially, the names that moved the most are, I would say, the most growth-oriented and most speculative. So, for example, despite nuclear feasibly being probably 5 to 10 plus years out from being the primary driver of these, we are seeing the nuclear names go, nuclear, while more functional and practical ways of powering these data centers are being kind of overlooked, I think, even to this point. So in the same way, we are starting to see names that are more pick and shovel, more infrastructure and supply chain oriented. For example, the packaging and testing of chips. We're starting to see a lot like that, starting to set up and take off. So that's kind of where my head is at when we're going into this cycle. So let's hop into some charts here, and we are going to kind of work through the narrative as I see it through these charts. Because I think, pictures tell 1,000 words. And I was working on a presentation and I realized what better way to show this than through the charts. So let's hop right into there. There we go. First off, real quick, let's talk about SPY. We have this really nice channel. Got a nice couple taps up here. Tapping at the top, the very top. And from the bottom, this is where, it's a little debatable, but I think I like the drawing right here, ignoring this kind of undercut because we have a nice back test here that showed this is kind of where the rising buyers were. Same with the body of these candles. Same with the initial flush here, as well as the back test here and here. And then I believe this is where we saw initial buyers yesterday and we're kind of reclaiming after a flush, similar to this move, this move, this move. And this is really the bread and butter setup, right? We have support, we lose support, everybody gets scared. And in some ways, everything's kind of a faith-based rally because, buying the dip takes conviction. And this was an area where if there was conviction, this is where they'd step in, and we did see that. So for me, I think that we have a really nice setup into next week. I know that I'm going to be looking to buy any early week weakness as long as there are levels respected, so to speak. So we can talk more about that after, but I do want to transition into these AI names because I think they did tell the story. So first off, why don't we start with NVIDIA, just because it is NVIDIA. When I say that I think that the best way to play AI into the mid innings here, because I think that's kind of where we're at. We're probably maybe inning 4, 5, 6, 3, I don't know, but somewhere, not at the very beginning, definitely not at the very end. So when we have the previous leaders acting like this, it's not bearish, but it's just showing that maybe they aren't going to be the ones that are going to be the primary drivers of this next leg up. Maybe they're going to need to consolidate a little more before they kind of take the lead again, so to speak. So on a higher time frame is how I think we should look at most of these, because this is a higher time frame kind of perspective of the narrative. What we're seeing is constructive behavior, a breakout and a backtest here of a key new support zone being formed. So as any of you who caught my little appearance on Trader TV just saw, I really like when these really strong names correct via time and they make a new high. Clearly, this was scary if you were a long-term investor, but it caught right off this monthly trigger here, beautiful there, and formed a new base in this whole area. Let me change my cursor so you can see this better. So right here and right here, this whole area became a new base, and we rallied off of that. Now we're starting to see the same process of correction via time on a shorter time frame here. And this is what we like to see, where it's tightening up in this area here. And we just want to see it respect this 9-week moving average and really this 20-week moving average. And this whole kind of area between those two becomes a area where we can get involved if we are looking to get more exposure to this theme. That being said, I think the names we're going to talk about are going to show that they are maybe ready to push more in the short term than the NVIDIAs, so to speak. So we are still, toying with overbought on the weekly, I would say. And on the daily, this is giving me a little bit of a pause, this kind of double top into this overbought area. And so despite this nice candle here, I think that maybe it's not ready to just make a clean push up in highs into new highs here. So I would really like to see a nice move down to this 170 area, just kind of get people a little bit scared. But we'll have to kind of see. So maybe we have a rising support like that, and it's trying to reclaim it. Maybe it can make the clean reclaim. Maybe it needs to kind of wash out a little bit first while this rises up. So that's where what the leader is kind of doing here. And chips in general are looking incredibly resilient, right? Like this is nothing of a downtrend here. We're probably doing something like this, little bloody nose before grinding higher. But I do want to talk about some other names. So first off, we have Teradyne. And these guys are ones that I mentioned down here, and they are in the kind of more supply chain oriented sector of chips. So these are, kind of bottlenecks that I think that we can kind of start looking at that may have been overlooked in the first kind of initial crazy move in some of these themes. So Teradyne is working as expected, and we can look for similar themes that have maybe not caught up, that are maybe not as popular as high market cap as the Teradyne here. But I do want to mention this because it's nowhere close to done. I think this is going to be one of the leading names and the leading sub-themes here as we go into the next year. And I say that just because it's breaking a big base here. And if we zoom out, you got to love that when you zoom out more, a chart just looks prettier and prettier. So long term, despite us talking about it here and getting involved in here, I'm looking to add more just because on the long term perspective, the theme is just starting to kind of play out here. And this is a beautiful, beautiful cup and handle on a long term time frame, which I think should be a double or so in the next year or two. So this isn't a brag so much as a, hey, still keep an eye on this. It's not too far extended. Any small pullbacks, I think, are buys here. And this is, again, in the kind of supply chain, packaging, testing kind of sphere of the chips area. So what we can look at are names like Teradyne, and AMKR is another here. Very similar theme. This one's lagging just a little bit, but it's acting really healthy. And this is another one where any small buy or dips, again, to our weekly 9 moving average is where I'd like to look. So 31 to 30, any dips in there is where I'd be looking to add these long term. And I think overall there's a lot of room here. So these are the two that I had mentioned previously, but there's some other ones that I think are even kind of more under the radar that I think have a lot of potential here. And it's just in this kind of general theme of looking for the less sexy, but just as integral kind of aspects of the chip supply chain and the AI supply chain. Let's see. So we talked Teradyne, AMKR. This is one that's very interesting to me. Onto Technologies, I believe. These guys, again, in that same space. And what we're seeing is what I believe we saw right about here in the same process. So you see as these long-term moving averages are kind of curling under, we're seeing nice accumulative volume pushing in on ER especially. And see, we saw the same thing here at the bottom of the base. And now we're seeing the same thing again starting, I believe. So just going back one more time. This nice consolidation as the moving averages curl over on the weekly here. And we are just crossing into bullish on the histogram of our weekly wave trend oscillator or RSI, any kind of oscillator like that. Really good look. And now if we compare here, I think we have a little bit of room here on this initial push, and then it can start testing some of this this area up here. So this is one that I'm really looking closely at into the next week in particular. I think that this one is a lot less extended, obviously, than a name like Teradyne here or even AMKR. And so ONTO is on the focus, as well as CLIC here. And this is another one here. These guys do, let me refresh my memory, something about, check my notes. Okay, so these guys, oh yeah, they do the wire bonding. They apparently 80% of chips still use wire bonding, even though it's considered an outdated technology. I am obviously a tourist in the space. You can tell just based on my lack of understanding of what that even really means. So you can tell I've got some homework to do this weekend before I put these into my newsletter. But these are the names that are really jumping out at me over the past couple days of scanning. So I just wanted to get the names out there since they fit the theme in general. And it seems like it's time to put these on our focus list here. So this one is a little bit less developed than the ONTO that we just mentioned. And it makes sense because this one has yet to have earnings. But this is a name where we can look for potential catch up here. And we can assume that it would make sense that they would be consolidating into earnings. But if the sector is overall bullish and we're seeing good results in the rest of it, this could be a name to look for some opportunities there. So again, we're just coming back into our weekly 21 average and showing support there. We also have this blue stair-stepped line that represents the weekly trigger, or where support should be on a higher time frame than just a day trade level. So this would be for like a week position traders that like to be in for maybe a week to a month, something like that. And in general, I think we are just seeing a nice flag on this one here. Something like that with an undercut. Let's look at the daily. Yeah, looks decent. So we're watching this one here as well. It reclaimed this nice level. Was previously resistance, broke out, back tested multiple times. Pretty clean look there. So moving on with this theme, we also have some other areas that are a little less sexy than the NVIDIAs of the world, so to speak, but just as important, because when you're building out these data centers, what you really need is a lot of ways to make them as efficient as possible. And also just like, what are the components that are just as important as the actual chips, but don't get thought about nearly as much. So I'm thinking fiber. I'm thinking cables that connect these in the most efficient way possible. And the clear choice here, is GLW. So this is Corning. You might know them because they have a great deal going with Apple for their Gorilla Glass for the screens. But um, it's just, despite being kind of just straight up and to the right, I don't see it being done. I see it cooling off as it goes sideways. So maybe it takes a little bit. This is kind of like NVIDIA, just in the sense that like this one is not a secret, but it is still, I think it has quite a bit of room here when you consider that on a long-term chart here, we are not even at all-time highs yet. Each of these candlesticks is a quarter of price action, 3 months. And what I see is just a steady drive to pull this up into some of these key levels from the past. So 100, obviously very important. And that also is the quarterly pivot there. If we zoom in, we can see this is where price kind of settled at the quarter and then was an inflection point. So that's an area of interest, especially because it's just right at that 100 level, obviously all-time highs. And this is also a gap here that needs to be filled up to 91. So I do believe that we get a nice clean push. Oh, did they already fill the gap? Okay, well, in that case, that's why it's pulling back, because this was its first target. And so now, assuming that it can stabilize here, which is, it sure is looking like it's stabilizing to me, I think this one is going to be going for 100 in the next month or two, even if it takes a few more weeks to cool off. So this is the kind of big leader here. They are vertically integrated. They are going to be providing a ton of the cables and fiber optic stuff that these data centers are going to need. So GLW, that's great, but we can also look for other areas of opportunity in the space. Yeah, Brian mentioning that GLW is a wonderful long-term stock, but not so much a trading stock. In general, I do agree. But when you have multiple weeks of consolidation like this, and we have these moving averages catching up, I do think you can catch a nice clean move. And if you're looking for ways to get invested long term, this is a good place to do so. And if it dips, you go, hey, there's a nice volume gap here. I'd love to pick some up at 81 long term. Oh, it comes back to this volume node. It's at 80. Beautiful. Give me a bunch more. That kind of thing. Comes all the way back down to 70 or so. Jeez, the lower it gets, you just want more for something like this. Same thing for the Teradyne. Same thing for obviously stuff like NVIDIA. And I would say for things like IREN, and this one's going to be controversial because a lot of people are going to say, hey, what's the difference between the IRENs and the SMRs out there? Well, the first and most important difference between the IRENs and the SMRs is the price. These ones are not holding up nearly as well. And there's a reason for that, because these are far more speculative. And I know people think that IREN is incredibly speculative. I won't say they aren't incredibly growth oriented, but this is something that is much more showing to be much more relevant and in holding its value much better than these kind of flash in a pan momentum names like the OKLOs, the SMRs, the NNEs, those type of names in the nuclear sector in particular. So while I didn't include, there will be one nuclear name we do talk about, but in general, I'm not focusing on nuclear names here in this point of the cycle, just because they've run so much that I don't think that's where we have the best opportunity. And I think they probably need to correct primarily via time before we really get those clean setups again. Because if we do look at the SMR chart, it looked like it was setting up for a nice base and breakout here, and then it failed. So now we gotta respect what the market is telling us, which is that it doesn't seem like we're overtly bearish by any means. SPY is barely down at all, but these names got taken behind the shed. So like we got to respect what the market's telling us here. And until these set up again, I'm looking in the stronger areas like data centers. And so WGMI, this is the ETF, and this one's still looking very constructive to me and could well be doing this nice rebase in what we would consider this is a reaccumulation pattern, if this is what we get. And so before I describe this, we're going to look at NVIDIA and show what this would look like successfully. This is the same pattern on a weekly here. Where we have this, rebase breakout. And then up here, where everybody thinks it's mega extended, it actually is forming a double bottom, and this whole area becomes a new base. So it reaccumulates here. And instead of going, man, this rally's crazy. All right, instead of going, okay, stage, this is a accumulation. This is stage one base, stage two breakout. A lot of people, myself included, were thinking that this was stage three distribution, but it just was reaccumulation for a continued stage two breakout. So these trends can keep going a long time, right? Same thing right here is another great example where this looks like the end of the world, going from 7 to 3 until you realize that it just is double bottoming and going a lot higher. But when you were trading way down here and it's a parabolic move and you move 1,500%, you sure think the move is done. So that's why I want to really encourage people to not be so ready to short a name like IREN and to really not be too hesitant on buying dips on these, because on the long-term horizon, data centers are going to be a major component of whatever the future looks like. No matter where you lie on any spectrum, of where you see the world going, this is going to be a major component and this is going to be a major player. And if you don't like placing your bets on one individual name, totally fine. Buy the ETF. Same basic chart where this is a long-term base and it's just breaking out. And what I want to talk about on these are these long-term logarithmic fibs that we have on here. So I'm going to turn this off so you can see it more clearly. And we're going to go to the monthly. I think as traders, we would all do a lot better if we focused on long-term monthly logarithmic charts of major themes like this. CoreWeave was also a Bitcoin miner. Yeah, they pivoted hard. Wait, Brian, there's a 27% dividend? No way. That can't be true. But I'm sure they have a nice dividend. Yeah, they're a great long-term holding. But these guys, a little more volatile than the GLWs, but look how much room they have on these monthly charts. And let's see. Other good instruments for gauging these are things like Ishimoku clouds or Bollinger Bands on a long-term perspective like this. You can get a really good gauge for where you are in these cycles. But I just love these moves too, where we're just getting overbought here on the monthly. So these could go very, very much higher. And if we rebase, we should be looking for that. What we are looking for is this 53.33, call it 50 to 53 level. And this represents this 1.27 breakout level. So when you have a range like this is the level where it's basically deciding if this is a real trend with long-term, longevity and sticking power, then it'll go to its next major target, the 1.6 fib, and very likely, very often, the measured move of a 2x of the base up to, this would be 237, So it sounds crazy, but if you look at something like NVIDIA, which is not a crazy comparison to data centers, there's your base. Now we reverse this and make sure it's, logarithmic. And what's the 2 times move? $30. So you see what I'm saying? Like these themes could continue very strongly. It's not to say they will, but if you want to play this theme, I think this is where there still is a lot of juice left. So we watch this level here, and we would expect reaccumulation before a push much higher, and these would essentially double again, which is kind of what I would expect. Because it is hard to be too bearish on a chart like this. It is at the top of the channel, so maybe it corrects via time like we talk about. So these are the data centers I'm looking at. There's one other that I want to put on your radar too, guys, and this is Wolf. And this is just because it is a high quality name that is still very deep inside the space. See, it still is in the base here on the monthly. It has not broken its all-time highs yet, like IREN or the sector as a whole. So this is a laggard, and it's just starting to kind of get more volume and more interest. So It did tag the top of the channel, but again, I would expect any dips to be buying opportunities long term, and we would be looking for a nice push to the next major fib, which, as I'm seeing, isn't on here. Let's add it. There we go. So this is a fib that a lot of people don't talk about. This 0.886. It's basically halfway between the 1 and the very important for me, the 0.786. So this gives us a nice intermediate target here, and it also really nicely aligns with this key pivot up here at 26. So this is where I would be looking for in terms of 3, but more ideally, or more realistically, 6 months to a year out targets, where we could very likely see what is essentially a double. Yeah, just about a double. So those are my favorites in the data center space here. And yeah, Nick or DJ 2AM here is talking about thinking of switching to swing trading. Saying he loves scalping without being able to have eyes on the trades while working. Yeah, it does make it tougher for sure. It's never a good sign if your day trade turns into a swing trade, just because it's hard to manage it. And I totally have been there for sure. What I would say is that it's been very hard for swing traders the past couple weeks. I'm primarily a swing trader, and it has not been fun. So I have some decent unrealized losses on some speculative positions that we're going to hope work out. But regardless, don't feel bad if you've been having trouble. But I think we are starting to get into a little bit of a place where we can start looking for these swings again. On the monthly on SPY, very respectable candle here, nothing to worry about. And I think that with the amount of time we have left, we can make this into a nice bullish candle, and then into December push up very nicely and test 700. So that's kind of the target for the end of December. I am not bearish at all. This is very healthy. And I think we just got to keep things in perspective, which is really that this is a deep back test of this very poor structure breakout. This was a gap up, gap up, gap up. Triple gap up is like, that's tough. That's hard to sustain. So it makes complete sense that they flush this out. And then it makes complete sense that they do the thing that feels really bad, where you come back into support. And a lot of people probably added, I know I did, to positions. And then you're instantly big red on your ads, and it feels terrible. But really what it's doing is it's just clean up this previous imbalance. And if you take the fib of this range, it really does tell the story. This channel helps too. And when you add the confluences, it really makes a lot of sense in retrospect that we did what we did. We tagged the top of the channel right at this 1.68 extension. We have this nice clean range that we form, and we extend to the very clean target. We hit it. And then what do? We come back, we back test, we try to catch, and then we shake people out. We test the halfway point of the range. That is deep as you really want to see in a back test. And we show an initial strong impulse to buy this back up, back over the channel, back over the 50 here. So the second it was on sale, the second that it was in the discount half of the range under this 50 fib, it was immediately bought up. You can't be that bearish. Long term, that's totally fine. Then we go to our weekly and we see, we had the confluence with the weekly 9 EMA there as well. Oh, and this volume shelf here. What we are doing is we are forming a megaphone. Let's draw that out. See that megaphone? You can draw it like that. You can say like that with these two wicks, something like that. Either way, it's an expanding pattern at the high of ranges. These have about a 65% chance of breaking out bullish. And if they do, they're very explosive. And they very often will hit this 2 times measured move, which would be quite substantial. Let's look at what that would look like. About 728, 730. We could say that by the end of February, that could be like the big target. Because I know it, I don't know. I'm very high I have very high confidence in 700 by end of the year. I think that that's very, very reasonable. Where this kind of overlap Santa rally that extends, and there's very few people that want to try shorting it, that kind of thing. This grind up rally, as you get the positive inflows in the beginning of the year, I think that that could kind of lead up into the end of January or so, and we could see that extended push up to the 720, 730 range to hit that target. Otherwise, we also have the 1.6 fib that we can look for. Whoops. And that's 715. So both of these very reasonable targets to look for. So where are we in this narrative here? We got a little sidetracked on SPY. Sorry about that. We talked about so far about the kind of infrastructure and supply chain names that we can look at for, if not the sexiest trade, for a very, very substantial push up as money starts flowing into other areas of the AI chain. We talked Teradyne, AMKR, AMKR, Onto Technologies here. This one's really pretty to me. It's got a lot of room and looks very similar to what Teradyne looked like around here or here. Long term, Teradyne is still number one. It's just an absolute supreme chart on the monthly. This is like my NVDA for the next year or two, I think. We talked about the data centers, and we got into the other aspects in terms of the fiber optics. We haven't talked about the riskier plays, the more speculative fiber optics. I'll really quickly just mention LUMN, LITE. This one's the most overbought, but clearly very strong. If this one flags out, we can look to enter this somewhere. AOI is the most speculative, and this would be banking on like just explosive growth that more so than is priced in. Otherwise, this one will probably lag compared to the others here, but this one does have a nice base and a lot of room as well. So these are just some other areas you can look for. I think LUMN in particular, it's been beautiful. I mentioned this one at a break of 7, and I scalped it for 5% and sold, and it's up 30% since then. I wish I held because it looks like it's going a lot higher. But now I think that it's important to talk about how we're going to power these things. The focus has been all on nuclear. What is the sector? Nukes. As you can see, just straight up, straight vertical. We hit our measured move of 2, and lo and behold, they're found sellers. So probably this one needs to correct via time. We could look at something like maybe, I don't know. I'll have to look at the sector a little closer. But in general, these names, they kind of did their thing, and now they need to chill out. Doesn't mean they're not going higher. I'm definitely a massive long-term bull on these, but I would stick to the big boys like CCJ here. This one could chop for like 6 months and then just go and be another double. CEG. This one looks great. Great volume accumulation here. Looks ready to go higher. So this one in particular, I like quite a bit. But in general, I think that there are better ways to play the theme in terms of energy. And I think one of them is natural gas. So just in terms of the actual underlying commodity, for the first time in quite a while, it's constructive and looking like it's ready to break out. So we have a nice little peekaboo here on the monthly chart. As a natural gas enjoyer, it has been quite a while since the chart has actually looked playable. Since like right about here, this backtest, and then this did wash out completely. So it's no fun, and this is a tough trade to time, but it does seem like it is a good time. We're going into winter. It seems like it might be a cold winter. I am no geologist or astronomer. I have zero expertise, but smart people are interested in this, and that makes me listen when there's a chart like this. We could also look at it as an inverted head and shoulder bottom here when you have a look like this. nice and constructive here. So the underlying's looking good. And more importantly, it's just an area where you don't see much talk about what is a very viable way to power some of these data centers. So there are companies that are looking very promising to me in the natural gas space. We can talk about a few of them here. Oh, nice. Talk you like Natty too. Yeah, the Widowmaker. It's a tough one to time. I'm looking at these equity trades to kind of play out the theme, just because I don't know. Because Boyle, I've had bad experiences with it. Back before the split, all my poor lines. Oh man. But Boyle, that looks like capitulation volume. When these leveraged ETFs start cooking, you can get some crazy returns. So yeah, maybe I start a position in Boyle. But I think the safer way to play it is with high quality equity names like RRC. It's looking very, very constructive in this ascending triangle base here into the monthly 200. Really like this name. You can look at LNG, Chenier Energy, and this looks like a leader that had a similar ascending triangle breakout, back testing key levels so we can see if it can catch there. I like AR, Antero Resources. This one's looking interesting to me on a longer term perspective. The monthly, a little less appealing, but it's starting to shape up. And if it can put a close in above these necklines of the previous two, and especially over this 9-month moving average, I think it can really start pushing here. On a weekly, it's looking even better. We're getting a crossover after a double bottom here. And as you can see, there love to be double bottom crossovers to give you really nice entries. This one kind of 1-2 here as well, and the crossover provided a really nice entry. We're seeing the same thing, double bottom here. And I think that this one is even prettier because you also have this kind of breakout backtest type look here, where it's holding this clear level of interest. So this one I'm very, very curious about getting involved in. I do like CRK. This one is a little more volatile, but another big base here. This one, I've been told the fundamentals are bad. So um, the grain of salt there is that the fundamentals always look bad when the chart is starting to look like this and bottom, and then the fundamentals catch up as they, basically confirm what the technicals are and the accumulation of institutions are kind of showing on the chart is what I've tended to find. Like the amount of times that I was told the fundamentals on Palantir were terrible at 15. It's like, okay, well, why are they so good at 70 then in comparison? Well, of course, the same people who said they were bad here say they're terrible up here and they want to short it to 0. But, the point is that narrative always lags technicals. The technicals show the accumulation that will set the narrative as price starts to catch up, is what I've found. Same kind of deal with Hood. Was told time and time again that it was a terrible investment when it was at 20 because it should be back in this very clearly established 9 to 13 range where the efficient market has decided it. It's the fair value. Yeah, okay. The technicals did not show that story, and now we're seeing this. So that's why, like, the biggest thing that I think we can focus on in any kind of quote unquote bubble narrative is looking for these type of plays, these asymmetrical risk reward plays, where we can get these massive moves of what we call a palantiring chart. And that's a chart where there's an explosive breakout through the base and it just never looks back, because these are the ones that we want to be invested in. A very likely one that we're seeing is WGMI. This one likely never comes back here. It just keeps going and going and going. Nick, I don't know about big vision, but I do think that it's best to keep your head on these longer term narratives. If you're going to be a narrative trader, time and trust the process and recognize that these themes can have big drawdowns and really just be a part of an over. It doesn't mean you're wrong. It just means that it's time to have conviction. And when you combine that with technicals, you can save yourself a lot of pain, because you can say, all right, the theme still is probably valid, but it's going to need a lot longer to play out because heck, people started selling. That's all you can really say. Like, I'm not bearish on small scale nuclear reactors, but actually, OKLO looks fine. It might just have been SMR because of the dilution news. Again, just because this chart needed to take a 40% bath from where I thought it was going to break out for another 50% move up, doesn't mean it's done by any means. Another good example is the space basket. Everybody's so bearish on these momentum leaders, but on the monthly, I still think this is just a part of the bigger move. Same thing with RKLB. I know these don't have anything to do with AI, but they do represent the same kind of idea of these palantiring names, where these, when themes are hot and you catch these like these moves that are going to last years and years, these big cyclical moves, that's where the money, that's where the real money's made. So that's why we can look at charts that look like this, really nice long-term constructive bases, and we can look for that same kind of surge up where you get just crazy, crazy moves where nobody would expect. So these are the charts we look for. No spoilers, but this is one that I'll be very interested in the next month or two. Because, guys, scalping is stressful. I like to do it sometimes, but I don't like to need to do it. So the more I can just let my money work for me and take small, targeted shots at stocks that I think are very likely to quadruple, 10x over the course of 5 years, takes a lot of the stress off. So we look for stocks like this that are just pushing out of big bases, that are showing nice consolidation patterns at the bottom. And these are going to be where the next themes start to lie. You can start to look at things like robotics too. And this is going to draw a lot of ire, but this is your mega cap for robotics. Tesla will be twice as high sooner than anybody wants to admit. So there's another kind of way to play AI, but it probably will be a later innings play, when we have a suitable bio, or like robotic shells for these things. Because right now the limitations of AI are very clear when you stick it in a, little robot. They do silly stuff. It's funny. But it will be funny in 10 years, probably. It'll be a very, very serious thing that will have a very large TAM and be growing rapidly. So we always want to try to be not skating towards the puck, but, skating towards the opening in the ice, so that we, when the puck comes to us, so to speak. So that's how we caught these moves in Teradyne way down here under 100. We were buying at 90 to 95, and AMKR, we were buying at 20 to 24. And now it's okay if they pull back a lot. Same thing with, this is another way to play AI in the middle innings here, biotech. So we can talk briefly about how we can kind of combine bullish sectors, because we saw a lot of relative strength in biotech as well. So how can we kind of leverage the fact that we're expecting both of these to outperform? What I would say is, and I see you guys talking about copper. We'll get there because we're going to talk about silver. And I think we'll segue into those by talking about solar, actually. So if you guys can see the narrative thread there, you're ahead of the curve, but we'll get there. Really quick, I want to talk about healthcare and biotech in particular. Genomics and gene editing, that type of thing, I think is a great theme to be involved in, because again, we are looking for areas where we are buying at the bottom of these long-term trends. So you guys know I'm a massive China bull, still am, and I think it's a great time to get involved there too. But similar type of charts, where we're just starting to make our move after very clearly putting in a base. Like, no one's going to tell me that we're going to go back down here. I just don't believe it. If so, then I'm completely wrong, and we're probably going into a recession, like major one. I think it's much more likely that we'd retest the mid range of this, and that's a double from here. So that's where you get really, really nice potential returns. And that's where we got great returns so far on names like Baba. See how the leaders just go crazy off the bottom when you're buying down here in the 90s, and we were buying in the hundreds, 120s. And we can even look for the catch-up trade to start take place here as well. These long-term levels, long-term trades. And if you're a believer in what people like Jensen are saying and don't believe it's just marketing to sell more chips, then China's probably going to be doing pretty darn well in the long term in terms of AI development and tech advancement. And you start thinking about the kind of premium or the kind of discount that long term investors are getting here, investing in companies like Baba or Baidu, when they're so darn cheap. So that's another way to play AI. You can play it by looking for discounts in terms of getting a discount because of geopolitical risk or perceived geopolitical risk. Talk is mentioning any ETF, any Asian ETF with Samsung. Yeah, absolutely. So what is that? XLY? No, not. I'm sorry, not XLY. South Korea is EWY. I mean, perfect example. Look at that. So yeah, any any company that is basically falling in line with the type of run it hot mentality that Trump is in line with seems to be doing pretty darn well here, as the dollar long term is chopping sideways, even if it is going to rally, which a lot of people think. I'm not 100% sure. But regardless, long term, I'm not very bullish on the dollar. And I think there's major room for Asian ETFs like he's talking about to excel. We talked China, we talked South Korea here. Long term, this is just starting to break out. This is a really beautiful consolidation pattern on the oscillator here. I really, really like that look right there. So this is definitely one to keep an eye on. We can also just look at Latin America in general. Ever since we've so very kindly protected Trump's friends' assets and investments in Argentina, and gave the Chainsaw Man money, that happened. So when you play ball with US hegemony, you do very well. See all of this volume? This is when we started getting involved. So we can look for these opportunities when Trump is going across the seas and saying he's having very constructive meetings with other countries, and see that their charts look like this. EWY, very cool. Talk saying Dixie will be fine. Yeah, I'm not one of those, dollar hegemony impending collapse guys, but I do think long term, since we are kind of talking about where things are going long term, definitely worth discussing. So, peso down. Yeah, exactly. Yeah. EW. What is Mexico? It's been a while since I went through these. EWW. Another very, very nice chart. Look at the monthly chart there. Let's get rid of that. And what we really see is, oh man, beautiful opportunities setting up in, non-US markets here. We can also look at Brazil, EWZ, and I would bet your bottom dollar it's a pretty chart. So again, here, major long-term opportunities that are just starting to break out. Absolutely beautiful there. You can go EWZ for general exposure. You can play like the fintech space with a name like Stone. This one just trying to form a base here too. Actually, like EWZ a little more there. What is my favorite Brazilian name that I keep forgetting about? NU. This is fintech as well and very strong. Long term, I think this one is going significantly higher. So these are ways to play just general geopolitical shifts here, as we see the rest of the world cooperate to get around U.S. tariffs, and as we see the potential of the tariffs getting overruled. We're going to be seeing more and more good, like essential tailwinds for the rest of the world either way. So that is a very, very brief overview of why I think there are a lot of great opportunities here. And yeah, the only through line between what we're actually talking about in AI is that these present asymmetrical opportunities for long-term investments. Vale, yeah, there's another great one. Vale is, they do copper and other mining. I don't think they do many rare earths, but this is a good segue into a lot of the materials here. Yeah, Vale, incredible weekly chart there curling up. And yeah, see, it picked it picked the death path. Apparently, I haven't looked at this one for quite a while, but long term, there's so much room on these. So, how about copper? Dr. Copper, the risk on, risk off indicator. This is not what you see at the end of a bull cycle. We are seeing the testing of all time highs. This is an incredible chart. I think likely it probably rallies significantly, makes a new high like 10%, but I don't know if it's ready to just surge. It might, and that would be incredibly bullish. I think maybe this one needs a few weeks, even a few months. But what we can look at is this kind of looks like a high and tight flag. Let's see how much it moved. Yeah, okay, so this is a high and tight flag. So the criteria here is a move of over 100%. I think that's only over 106 or over 100, over 60%, something like that. Anyway, a big move in a month or two, couple months, and then 3 to 5 weeks of flagging where you don't pull back more than 25%. So that's really tight, only 15% pullback. This is an incredible chart. We can go like this. Maybe it needs to come flush down here. That would be totally valid. But in general, this one looks like it's going to push. I also did see some flow on FCX. This chart, not the prettiest, but not terrible. Leaders look amazing. So yeah, copper looking great. Let's see, look at Melly. So they're going to be your Latin American Amazon. That's obviously oversimplifying it, but I'd say that it's starting to be interesting. If you look at this pattern, what are we seeing? Kind of the same thing, huh? Loves to do these deep back tests, even the double back tests. In general, it did the thing that I was annotating here. It went up here, and now it's digesting sideways, correcting over time. And on our histogram here, on our oscillator, we're starting to see it being ready to cross over. Once this does print a nice buy signal, probably in the next week after it posts a nice higher low here, starting to look like it's trying, I would say this is probably a buy to come up and clear liquidity at all-time highs. They have 1, 2, 3, 4 attempts there. Nice set of stops. I would assume they'd want to take it right up there. That's what I would do. I would say there's likely juice for it. Last time it was at this point, was right about here. You got a nice push through all-time highs, back test, and push higher. So that would look like something like all-time highs, back test, push higher. Maybe something like sweep the 300 or 3K, something like that. And you got a channel there too, it looks like. Pretty good channel. Yeah, I like that channel, gotta say. Pretty. So yeah, I like this one. And it fits the theme. What else we got? One other one, just because we're talking Melly, JMIA. This is African online retailer. This is the one we sniped at 250. Currently up 337%. So this one's fun, and I think it has a lot more room. Again, these names present amazing opportunities when we think in horizons of 5 to 10 years, where we're considering the entire price action here is just the base for these major moves up, because really tons of liquidity has not flown, or not really entered these. They're just starting to. If we look on a higher time frame here, these present such long-term opportunities. If you believe, of course, these are speculative, but not as speculative as you might think. Really, we're just giving an amazing discount to people who I think don't really read that much history and know about the development and industrialization of other countries. And there's just so much room for growth in these countries. And there's so many amazing business opportunities that we can take small calculated bets in to do very well. Like I wasn't betting the farm on NU, but I mean, within a few months, I'm up 40%, and it feels so safe to just hold forever now. Like it feels like I'll never get tested back here. And if I do, I just want to buy more. And that's the case for so many of these, like Stone, when I'm in like down 12 and at 9. So long term, names like Baba, I'm never selling these under 100 shares. So we just look for similar opportunities elsewhere. Let's see. What else did I want to talk about? I think there's one area that we still have to talk about for these AI plays. We talked about kind of how China fits in. Oh, really quick, we'll go over the healthcare stuff. There's just a few that I'm looking at, and they're not healthcare so much as genomics and gene editing. I think these, again, provide amazing value if you're going to be patient. RXRX is just putting in a failed auction here after earnings, kind of flushed people out. Biotech in general, a lot of money going into it. I think that trend continues. We can look at XBI really quick and see that it's just testing the 50% fib here. So it's just starting to find acceptance at the equilibrium, and it should push up into the golden pocket up here next. Somewhere around here, we could call it a mitigation block from this consolidation. This volume shelf at 125-ish aligns with the fib as well. So that's our pretty clear target here. And I would say any dips are going to provide really great entries on names that long-term have a lot of potential, but short-term are getting just held underwater by shorts. So I think this is one where when the money starts flowing heavily back into XBI, when it's not in consolidation like it has been, they'll get out of the way of here and we'll get a very quick move up to at least 7, which is going to be, almost a double at this point, 70%. And a very high likelihood that over the next year we sweep at least up to 1250, which is 160%. So if you can stomach with a small position the potential of going down another 20%, very likely you get yourself a 3-to-1, potentially 6-to-1, potentially, I don't know. What is that? I don't even know what that is. A crazy RR there, right? So that's what we're kind of looking for on names like RXRX. That's what we were looking for in Beam when we bought. I bought a very small amount, not enough to be happy about, but I did buy some, like 15, 16. It was 18, I believe. Yeah, right around here. Just off the double bottom kind of structure and belief in the theme. And now I'm seeing Twist looking pretty darn tasty too. And this one, I really love the monthly chart. It's posting a really nice, what I believe is a cup and handle here. Nice channel handle there. Oops. Nice cup there. And most importantly, because I know a lot of people don't believe in pattern trading, and I don't blame you, horizontal support, that matters more. We have this nice base, this nice point of control right here. You can actually zoom in just a little there, focus on the important part, which is this top shelf there, and then the bottom of the big shelf here. Excuse me. And it shows this area of interest previously at multiple points is now starting to be reclaimed, and we should be able to start trying to flip these again. If we can flip these, that's when we get very interested for aggressive ads, because then we're looking at a double just to get here, which is the next point of interest, this clear pivot, and a very high likelihood of pushing much higher into this fib zone, which we would then draw like this and change it to this. So 70 and call it 100. So these have tons of potential here, and they're all in the themes of essentially as compute ramps up, we have the opportunity to basically brute force our way through these genomic problems which previously have posed obvious problems just because they would take so long to crack, essentially. Um, the potentiality of some crazy moonshots in this space really goes up, and the potentiality of these types of companies getting acquired goes way up too, as this becomes more real. And essentially, the thesis here is that the likelihood of these moonshots playing out and these acquisitions happening is creeping up faster than people are pricing in, just because they're so focused on pricing this into the nuclear plays and the data center plays and the NVIDIAs and the chips and all of the stuff that's more direct. This is a little less clear, and there's a lot more risk as well. But when you look at the historic valuations of these biotech companies, that risk feels a lot more overblown than the prices would have you believe, if that makes sense. So that's kind of the general thesis on those guys. Just wanted to put those on your radar. TWST, Beam, that one's a little bit less appealing, but still looking pretty darn good here. Same kind of basic idea of these have tons of room to go if they're going to go. And RXRX, which I think is trying to scrape out the bottom of a wick-off accumulation pattern down here, put in a spring, but can't say that you never love a big high volume push up that gets rejected and pushes lower. So we got to see where this monthly closes. Hopefully somewhere up around over 550. And I think that just about wraps up the names I wanted to talk about. We'll really quick talk about solar as well, just because this falls under the same idea of risk overblown. I don't think the clawbacks, the subsidy clawbacks, are going to be nearly as bad as people expect, if they even happen at all. I'm not an expert on policy, but I am slightly more well-informed on charts, and this path is going quite well so far. Essentially, we are banking on this being a nice bottom, and the fears of solar being overpriced and the potential upside of industrial scale use for this technology to power these data centers is starting to be priced in. FSLR stands as the best position to capitalize off of this because they have technology that nobody else does. This is very thin paneled solar panels that essentially use far less silver than their competitors. This is important because silver looks like this long term. Again, another one where the whole price history is essentially a big base, and it very likely is going to go much higher in the next 5 years or so. So that is another component which just is starting to be priced in, and we see that when we compare FSLR's strength compared to the ETF. We can do that by looking at the ratio chart. So look at that. That's the strength of FSLR, the leader, compared to the overall index. That being said, I think there's a lot of room for this whole sector to go up. It's very slowly starting to play out, but I believe this is carving out a nice higher low, and eventually these names will be trading much, much higher because solar is not going to be the same kind of answer that nuclear is, but the market is not nearly as efficient as we like to believe, I think, or we tell ourselves. And I think that just because of the liquidity draw in some of these solar names, or I'm sorry, some of these nuclear names and other data center energy providing names, that's kind of taken money out of other sectors. And we're just starting to see that kind of transition back this way. In a similar vein, this is the same kind of logic that got me involved in China at the beginning of 2025 and really the end of 2024, right down here, because the selling was just so incredible because it was it was like a seasonal flows where Qs were being China FXI and KWeb were being like systemically sold to buy tech, and until that kind of trend changed, there was just too much downward pressure. And then once that pressure lifted, we can start to enter price discovery again. So TAN, similar thing here. And I think, and see this occurred around the tariffs. So I think that was kind of another pivotal cyclical bottom there for it. Just something to put on your radar. We like solar. to some degree, but mostly just the leader in FSLR. And I'll throw one out there for you as well, JKS. This is Chinese solar. Another one that's just starting to push out of its base. This is where the volume really got interesting. So it'll probably revisit up there at some point. But the interesting thing is, despite this being by far the highest volume day, look where most of the volume is actually located, right down here where we're pushing off of. So I think it's very likely we make a trip back up to the $40 to $50 range and potentially a lot higher over the next couple of years. The monthly's just, or the quarterly's just starting to cross over there. Monthly's expanding nicely. And the weekly's just starting to cross over bullish again after accumulation. So this is one I'm very interested in as well. But again, quite highly speculative there. You got to believe in both solar and China. So it's not the easiest elevator pitch. All right, guys. Catch up on some questions here and then start to wrap up. That was the gist of what I want to talk about. Just some areas to look for and ways to play this next push in the AI theme. So Talk is asking, so is Bitcoin still along with successful quantum computing? All right, you want to get a little bit existential, a little bit philosophical here. Here's how I feel about Bitcoin. I think it is a integral pillar of the next kind of phase of how we conceptualize and look at like energy use. So I think we're seeing kind of a phase shift where nuclear represents the potential for a closed loop energy system and essentially infinitely powering AI, which represents the potential for infinite compute, infinite processing power, our ability to kind of brute force our way through problems and potentially, to some degree or another, end a lot of limitations in terms of, oh man, it's a big question. I just see Bitcoin and crypto as kind of the third prong of this, kind of the financialization of energy. It's like the first technology that's figured out how to directly financialize this transference of energy to societal capabilities, that I think this kind of trinity of potential free energy, potential infinite processing power, or at least exponentially scaling processing power. So I don't think Bitcoin's going anywhere as a trade. I also don't think it's going anywhere because the incentive for alternative currency pegs is just going to increase. I don't think that Bitcoin's going to replace the dollar anytime soon or anything, but I do think that just there's a growing need for investment in an ecosystem that is outside of the dollar. So even if it's like pinned to it, like stable coins in some way, I still think that maybe that's when we'll start to see the flippening actually happen and the utility of Ethereum starts becoming relevant to the conversation. Right now, it seems like we're just purely governed by institutional flows from the ETFs and everything. And we're just basically leveraged QQQ until the market has a reason for it not to be leveraged QQQ. I think how that fits in with quantum is a little more hazy because I think I'm the only honest one who's admitting that I don't know what the hell quantum computing is. I think you're all lying. You act like you know what you're talking about. So I think that that's the most bubbly aspect that we're seeing right now. And I still think the names are going much higher. But I don't think that it has any significant impact on Bitcoin because I'm too dumb to understand why it would. So maybe it actually does. But that's what I think about that. All right, what else we got? Talk saying that they closed their REMX trade with the thesis that China may restrict its minerals from being on the stock exchange. That's interesting. I Also got stopped out of my MP, which was the only remaining trade I had left. Stopped out at 65 where I entered on the last tranche. Took some off at 100. That felt great. Took half off at 82 so that I could hold for 100. And then the last quarter got stopped out. So it was a fine trade. Look at that. That's always pretty, though. The exact response to the 50. So that is the only reason why I would say I don't think the trade's done. But I think it's probably dead money for a little bit. Unless what we're seeing is a megaphone here, which could mean that we are getting a decent. Kind of looks like a megaphone, doesn't it? So I'm hesitant to say that this trade is done, MP just being the leader there. So maybe they could outperform while REMX does a whole lot of nothing. In general, this one looks like it's at the middle of its range too. This being the kind of weather vane. Yeah, look at that. You just know. When you know, you know. That's a mid-range back test right there. So I don't like buying things at the middle of the range, but it's one I like to watch and see what they do. What I would expect is this keeps testing down here, probably reaching for this 21 EMA, maybe reaching for this low, fills out this volume shelf here, or the low volume node, retest this, undercuts and reclaims, something like that. Probably just messes with people for a while. I think the initial, it's always tough when you're getting parabolic moves off the bottom with so much room in a range with a geopolitical theme with new headlines coming out every month or so, every week or so. So I would say it's time to watch and hold runners if you believe in it, and really just probably keep it on, keep some alerts going. Like if it reclaims the 21 day or something with power, then okay, that represents a character change. If it reclaims this high volume node at 70 on REMX, something like that. In terms of China potentially restricting minerals from the stock exchange, who's to say, brother? Who's to say? T.I. Bryant, do I have a scheduled live day trade show for next week? Yeah, sorry, I had to call in sick to trade the pool this Wednesday. I will be on next Wednesday in the morning to do some live day trading. I will do my best to get on my own server on Monday morning as well. Yeah, health's not been amazing. So with the market conditions, I've been kind of just waiting for swings to set up instead of day trading. I just don't like being a bear. I don't trade as well to the short side, so I've been mostly sitting out, but I will be trading more next week. So catch me in my server on Monday. I will trade the open, and then on Wednesday with trade the pool. Let's see. REMX has ALB, LAC, MP, and an Australian mining company, LYNAS. Interesting. I like ALB and SQM. I think these are both names that are constructive and going to push up, and we might see some money going into these while MP and those cool off just a little bit. The previous leaders. USAR is just so speculative that it's like in the momentum basket more than anything. I do think that these aren't done. I think this is just another deep back test that we're seeing on a lot of something like that. A lot of these names. This is one that I'm in. I'm getting beat up on, but I do think it's still fine. My calls aren't happy, but this is another breakout back test type look. And again, the only reason I care and I'm in this name that's at all-time highs and potentially failing is because I see the potential for a much, much bigger move. And I'm willing to hold through some pain for what I think is a very likely test of this 47. And this is just where I think we're testing for the real breakout to 90 to 200 over the next 3 to 5 years, 2 to 5 years. So that is kind of my philosophy for swing trades in general for actual investment. And these are the themes that I'm looking to invest in over time. Not just these ones. We didn't talk too much about commodities. I'm still a very big silver and gold bull. I think just about every single thing in the world is still in a bear market compared to gold. So gold compared to SPY, still basing. When this trade really gets going, we're talking about gold being 1,000-ish. I know, sounds crazy. I think gold is not done by a long shot. I think it's about halfway through this leg. So those are kind of where my head's at with themes in general. AI going to be very important, but not the only one. But the areas I'm interested in are the less played out, less obvious plays right now. So I think that covers it, guys. Anybody have any other questions before I head out? Talked back in gold yesterday. Good timing, my friend. I think you're right. I think I missed my higher low entry. My path here is a little late and a little ambitious. But this higher low there, very nice. That was the day I should have gotten in. Or this day. But now I will wait for the back test and flip of these moving averages. Probably get it early next week. And this will be probably one of the trades that I focus on actually for a swing trade because I want to get a nice couple day move up to fill this gap here. I think we can explode pretty fast, get a nice 2% move on gold, which would be a really nice return on some weekly contracts. And ideally what I'd like to do is get one long-term contract and then some weeklies. And I take the weeklies off and then I have a really nice cushion for that long-term contract. And I think that is going to be it for this week, guys. Have a really good weekend. Go relax and prepare for next week because I know the past couple it's been a beating. Things are going to start getting better here, I'm pretty sure. And we don't want to burn ourselves out. So let's get nice and refreshed here and we will hit it hard. We've got a nice hammer candle on SPY. We want to push up. Should very likely push up. Let's go make some money. Buy dips next week and let's do this thing. Have a great week, guys. And you know where to find me. Take care.